You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At Public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch. The only options trading platform where you can earn rebates on every single contract traded. To learn more, please visit public.com/optionblock. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. And now, get ready to hit the Option Block.
All right, everybody. That music. I don't know what's going on in the home studio. Welcome once again to the Option Block, your bi-weekly source for all things options related. If I sound a little bit different, I am beaming to you this week from the Southern studio here, listeners. Once again, I am down here for the Securities Traders Association, a national conference. Going to check out kind of the intersection of all the securities you know and love, as well as options. And of course, maybe they sprinkle a little crypto on there as well. All sorts of fun. So it should be an interesting time. So I'll be beaming in and out from there throughout the week. But you know what? The show must go on. The fun must go on out there. And that means it is time for the Option Block. I am joined, as always, on the old program on the Monday episode by the unklest of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management, as well as by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. And now it is that time, listeners. It is Monday. It is time to kick off the fun for the week with a little bit of the old 80s Trivia Challenge. Here we go. All right, everybody, welcome to the 80s Trivia Challenge. As you recall, last week, there was a little bit of controversy, a little bit of consternation. Uncle Mike might have got a little bit heated. We might have seen the dark side of Uncle Mike on the show last week, but nonetheless, we shall persist. I said I'm down here in the Southern studio. I got in a day or two early, and so I thought, what do you do when you're down here in the Southern studio during the beginning of spooky season? Well, you go check out some of the premier horror events for the season. So I did that last night. I was up very late having monsters chase me around the place, which is always fun. But it got me to thinking about what would be a fun 80s themed trivia segment for today. And so the theme of monsters came back to me the 80s were indeed a halcyon time for many things, including some glorious monster films, including in the early part of the 80s, 1981, I believe it was. The follow-up film, I do believe, to the director John Landis made his seminal college film of Animal House. How did he follow it up? Well, I think it was right after. Maybe it's something else in between, but it's very close to it. He followed it up with what is perhaps the seminal werewolf movie of all time. Oh, Andrew, already buzzing out there. Mr. Rock Lobster, sir, can you name the seminal werewolf movie of all time? One of them that happened to be in the 80s.
Oh my gosh, I gotta remember the title right. A Werewolf in London?
Yeah, the American Werewolf in London. But you got
American Werewolf.
Yeah, American Werewolf in London. I'll give it.
Oh no, not another controversy.
You were 87% of the way there. You got the geographic location. You got the fact that it was a werewolf. You just left off the nationality at the beginning, but you were there anywhere else. Yes, an American Werewolf in London, classic John Landis film. Just a great movie. To me, that's my favorite of his. I'm not a huge Animal House guy, but that movie, that one, there's only a handful of really good werewolf movies, and that is one of them. So that one clearly doing it and well represented. They had a great Universal Monsters house last night. Kind of fun stuff. So there you go, listeners. Were you a fan of these? The other good one really in the 80s, I would say probably was The Howling. That's kind of it. Then you got to go back to the 40s with the Wolfman. So it's kind of been a drought other than that. So lots of fun. Is it a drought in the markets? I guess we'll find out, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
Get that music on the live stream. Producer getting it together in the Chicago studio. Sounds like a show now. All right, let's get rolling out into the trading block, listeners. Let's see what the heck is trading out there. And it's another kind of mixed bag out there on the street. As we're kicking off the show here, we're seeing S&P looking a little bit lighter. I say a little bit, off about 0.1%. The NASDAQ off 0.8% out there right now. So NASDAQ taking it on the chin. And the Dow saying, the heck with you kids, I'm up about 0.25% out there right now. So we're kind of all over the place on the docket today. That means VIX is kind of all over the place as well. It's up, it's down. You know, dogs and cats are living together. It was slightly up right before showtime. Right now it's at about 17.25. Still up on the day, but that actually puts it down about 0.25 point from where it was this time on the Thursday show. So not a heck of a lot of living. I don't know if anyone really expects a ton of living between now and Fed Day. A lot of people are probably going to keep their powder dry heading into the big Fed boondoggle going on this week. So VIX cash down about 0.25 point. VVIX, though, getting a little bit frothier again. 110 as we're kicking off the show, up 7 points. And looking a little bit frothier, a little bit juicier out there. Let's go out now to our champion for this week. And he's generously offering to take 0.5 point. I mean, you got most of the way there. I'm inclined to give you the full point because you were 98% of the way there. So we'll see. Let Uncle Mike get angry about it. I'm sure he will. But Mr. Rock Lobster, do you have any enduring memories of said seminal werewolf film? You know, the American Werewolf of London, you know, stay on the road, don't go to the moor, all kinds of fun going on. The Slaughtered Lamb Pub, which was actually a place in New York I used to visit frequently when I lived in New York. Unfortunately, it is gone now. But a lot of fun stuff. Mr. Rock Lobster, any thoughts of that seminal film? And then B, what's catching your eye in this pre-Fed market, sir?
I'm trying to think of the guy that wrote like Werewolf. I just keep thinking of that song. That was from the movie, right?
Warren Zevon. That is not from the movie.
Not from the movie? Okay. So there you go. That shows how much 80s trivia I really know. That was Warren Zevon, huh?
It was Warren.
I guess I kind of like Warren Zevon. I kind of thought it was one of those other like 70s, 80s bands, but you know, when they still played rock and roll.
Yeah, weird that there's another Werewolf of London thing that is not affiliated, but there is.
Oh, well, there you go. Yeah, I'm trying to. I have probably saw that movie once in the theaters 30 years ago, whatever, a million years ago. But markets, well, I think, don't we have first time the Fed's going to change interest rate policy since 2020? Possibly. Was the last time they lowered rates post-COVID. And you know what I saw, like, but I'm not quite sure which. I think the level of government spending is still the same or higher than it was during COVID. I read like the budget's still like, I guess nobody gave the U.S. government the message that the COVID crisis is over, and somehow
once you give the government money, they don't stop taking it, sir. They don't say no
I
more
just
money
realized.
for
I mean,
us.
the same thing has happened. Like, you had spending in Gulf War II. I mean, this is after 2000, right? Government spending for all that stuff never went down. By the way, the great financial crisis. So we needed that $700 billion emergency package spending. Spending never went down from that. COVID 2020 spending never went down for like, I don't know, but like who is getting the spending? Like I don't think I am. I'm not seeing anything different. But maybe somebody somewhere is getting it. And I'm glad we have a Treasury Secretary though to keep track of all the spending. They're doing a great job. Anyway, it seems to be a symptom of the last 20 years where everybody in politics has lost their mind. But I digress. The reason why I lead in with that is because the Fed is supposedly going to cut rates. People were thinking 50 basis points. It's more possible. I think 25 is more likely, again, for the reason I mentioned. However, if they do cut 50, I want to say the market is not going to like too much of a cut because that would be literally a suspension of any sort of belief in reality by the Fed. So I don't know if I don't think the market would take that great. But supposedly we have a sub 3% interest rate. So I guess rates can come down a little bit and then we should go on our way. But it hasn't stopped housing. I think there's other reasons for housing prices up where they are. But at least at this point, I mean, stocks got within a 1 day of all-time highs going into this. So the market is living on something else, which is earnings growth has been pretty good. I mean, you gotta, U.S. capitalism, you love it or hate it, but it creates a lot of wealth for a lot of people. And earnings have been pretty good. Like big tech earnings, have been very good. Although, the stocks didn't really move after that, but they were looking for perfection. They were still like a lot of growth. And I know, and I realize the market is already pricing that growth to a large degree, but I mean, earnings are still quite good. So maybe it's possible that there are some fruits of AI to some of these companies. Who knows? But, the market generally rallies on good earnings. Now, it's when everybody thinks the earnings are going to stop and turn south where the market stops rallying. So, and I think that's where we find ourselves. So, again, I would wish there would be some rationalization in spending, like a dose of reality. But until it becomes a problem, it clearly is not a problem, as traders are still taking us up to all-time or very close to all-time highs. So I don't think VIX will be anywhere close to 17 by Friday. We should see something, substantially lower because a lot of the big events will be done in the short term, or people freak the heck out again and we're 20 plus. So because things have been very touchy until this news comes out. So, and I think that's where we are. So not a terrible place to be, but corporate earnings growth is it is what it is. It's good, and those are all those are good reasons for shareholders. And I will just leave it there. I'm going to sound perky for once.
Look at you being perky. All these victories, they make you excited. I get it. They get you a little excited out there. Mr. Uncle Mike, same question for you, sir. First off, do you have any enduring memories of a seminal monster film of the 80s, American Werewolf in London? And then B, what's catching your eye in kind of a gently drifting day?
No memories of American Werewolf in London. I don't think I've ever seen that one, honestly. So, when you started talking about like '80s horror films, I thought you were going to go down like maybe Friday the 13th or Nightmare on Elm Street or something like that. But I was not expecting that. So,
I went the monster route as opposed to the slasher route. Uncle Mike, more of a slasher guy, it sounds like.
I guess so, but I wasn't really a big fan of. I don't really like scary movies that much. I'm a lover, not a fighter. I'm a peaceful guy, so I mean, stuff like that's really not up my alley. But what is up my alley are these markets, and they're really not up anyone's alley right now because they're really not doing anything. We're getting a slight rally, I would say, maybe in the corporate bond space, with LQD up 0.4% on the day. We have a little bit of buyers going into the 10-year, but really there's not a ton of any movement of significance right now, with the S&P down 5 points on the day. So, I mean, I think it's just obvious that right now people are waiting for the Fed on Wednesday. I'm not expecting a ton of movement tomorrow. So I'm really not having a great amount of expectations for anything that's happening. Now, what is happening, though, a couple of individual names. Apple is actually down 3% on the day, down $6. And we do have NVIDIA down a little over 2% on the day, just under $3. So there are a couple of things happening, but we're not really getting any major market movers with anything happening. So I think I think 25 basis points is the safe bet for what's going to happen on Wednesday, but it could be 50, it could be nothing, you never know, but I think it's going to be 25 basis points with everything with which we have going on. And what I would like to see, as me being the perma-bull that I am, I would like to see like a 40 or 50 point rally in the S&P today or tomorrow, just so we can go into the Fed day with all-time highs, but I'm not sure if that's going to happen. So for right now, I would say it's just wait and see, and just think about American Werewolf in London, with the odd coincidence that Warren Zevon made that song, Werewolves of London. Great song, by the way. Whenever I went to London, I always wanted to find Trader Vic's and go have a pina colada there with perfect hair, but I couldn't find it, so I didn't get to do that, unfortunately. So that's my Warren Zevon story for the day.
Just looking as you were talking, everyone's talking about Fed. I was looking at the Fed watch. We looked at it last week. I think it was on the Thursday show, listeners, and there was pricing roughly 75% of a 25 basis point cut and only 25% for a 50 basis point cut. Seems like the emphasis has shifted since then. We're at 41% right now for a 25 basis point cut, and a full 59%, so over 50% for a 50 basis point cut, which is kind of interesting. It's kind of interesting because we just made that our question of the week last week, listeners. So let me cheat and just pay off what you folks thought. We asked you last week, hey, if the Fed does what was expected at the time, sounds like half basis point is expected, or half a point is expected now, which is a kind of interesting and or surprising. But we asked last week, if the Fed does what everyone expects and cuts a quarter of a point, what do you think happens to the markets? And 41.7% of you said, kind of a bit of a shrug your shoulders, not much, because that's kind of what's expected. 31.3% said it might be a big sell-off because there's not enough of a cut. 22.9% said finally we're going to rally because we're getting the rate cut we've all been waiting for. Maybe we need to update this question this week and say, what if it's half a point? What happens then? Because then the argument is, maybe things are worse than we thought, right? It's one of those bad news is bad news is good news types of things. Is good news bad news now? Who knows? Is it even good news? Are dogs and cats living together? We got one of those weird ones in place, listener. So that was the results of our question of the week from last week. I'll tell you in a little bit what our question of the week is for this week. Uncle Mike's going to love it. But let's go out now to what's lighting up the tape out there today. Is it a banger day out there today? It's respectable. It's respectable, all things considered. Most things are hanging out right about where we expect them to be, maybe a little bit light. Let's start in VIX land. VIX right now, I guess if you look at the ADV, it's pretty much exactly where we should expect it to be. The ADV is 1.01 million. It's at 510,000 contracts right now, so pretty much exactly halfway to its ADV. Let's see what's lighting it up out there. The big dog out there today, 48,000 of the SEP 17 puts. So a lot of put action once again, followed by 36,000 for number 2 of the OC 50s, 5-0s. So right back at it. Listen, number 3, 29,000 of the SEP 18 calls. Number 4, about 21,000 of the DC 20s. So again, all over the place. And number 5, 18, almost 19,000 of the SEP 20s. So interesting paper across the board. Looks like there's size OI on all of those, so it's hard to tell, especially even the OC 50s. Can't really tell if those are opening or not, which is interesting. A lot of paper to the upside, listeners. So there's your big dogs on VIX today. Pretty much 510 on the tape right now. ADV 1.01 million. SPY also pretty much exactly where we expected. We expected around 4.35 million. It's at 4.3 million right now. The ADV 8.04 million. So SPY not lighting the world on fire. S, same deal, actually a little bit lighter. We expect the S to be about 1.75 million. It's 1.4 million right now. The ADV a little bit shy of 3 million contracts a day. Small caps, 780,000. The ADV is 1.39 million. I don't think we had a chance to break down small caps at the start of the show. Small caps up 0.25% right now. So small caps also doing a lot of living out there today. And the Qs also pretty much exactly where we expect them to be. We expect them right around 2.25, and they're at 2.3 million this time of the show. The ADV 3.89 million contracts out there, listeners. So intriguing times indeed. Let's get on out to the single names, listeners. Let's see what's lighting up our tapes out there. Is it a banger, knock your socks off kind of single names day? The answer is not really. We're at 167,000 contracts right now. That's the lightest we've seen it in quite some time. That is really kind of dog days of summer or end of December kind of volume. Again, it's a Fed week, so people kind of sitting on their hands a little bit. Not exactly surprising. Number 10 gets you to our old pal Softy. 167,000 contracts on the tape. 429.65 off about $1 today. So taking a little bit of a sell-off, even though it's had more of a range on the day. It's had a little over $5 range, about $5.30 range. 433.5 was the upside, and about 428.22 was the downside today. So got a decent amount of living right now, hanging out, I should say, off about $1. Number 9, we're going out to SoFi, listeners. So from Softy to SoFi, 796, up a quarter, nearly 3%. So SoFi bucking the trend out there. Good for number 9. 178,000 contracts, listeners. Number 8, the Amazonians, 218,000 contracts on the tape for them. 184.16, off about 234 right now, or a little over 1, about 1.25%. So they're kind of coming for the Amazonians. They've had about looks like a $2.50 range, right around 185.80 on the upside and about 183.30 on the downside. So interesting, decent amount of living hanging out. 2.25 points to the dark side right now on the Amazonians. Keeping the A tech strip alive. Number 7, it's AMD, 152, pretty much even, off about a quarter. On the day, they've got up to about 154, almost at a half. And to the downside, a little bit shy of 151, 150.90. So they've done a little bit of living out there today, about $3.50 as well. 151.88 is where they're hanging out right now, off 43 cents, ticking down a little bit. Good for number 7, 220,000 contracts, listeners. Number 6, Palantir, continuing to buck the trend, heading to the upside. 36.66 is what they hit today. It's also a new all-time high for them, or at least 52-week high. I think probably an all-time high as well. Actually, maybe not. Maybe they got higher in the mad days of 2021. But 36.66 for them. Oh, that was the high today, up $1. Good for 368,000 contracts. And the number 6 spot, number 5, Oracle, hanging out for the second time in our top 10 after reporting some banger earnings. 172.08, up about 10.05 today, or about 6.25%. So banger day for Oracle. So continuing their earnings love, their post earnings largesse, I guess, out there. Everyone's loving Oracle today to the tune of 394,000 contracts. And the number 5 spot, is Oracle gonna carve its way into a perennial top 10 seat? I'd be surprised. We haven't really ever seen that before, but except for a couple of times during earnings season, it seems like every now and then. But Oracle, 2 top 10s in a row, a rare double header for them. A number 4, speaking of names that have carved their way back into the top 10 and maybe back into our hearts, dare I say it, it's Intel, 477 on the tape today, listeners. 2014, up about 50 cents, or about 2.5%. So getting a nice little bit of love out there in Intel land. Good for number 4, 477,000 contracts. Number 3, it's Tesla. They're coming forward today off about $4, trading 226.36, off nearly 2%. They've had a range of 229.96, just a tick under 230 to the upside, and 223.53 to the downside. So they've done a lot of living out there today, hanging out 226 and about 2/3. At number 3, 736,000 contracts on the tape. Number 2, it's the fruit company, the aforementioned fruit company that Uncle Mike was just talking about. And, I had it up here and I just closed it out. Listen, there we go. Let's get it back up there. 215.92, off about 660, or nearly 3% today. So they are coming for the fruit company. The low was exactly $2 below. The low was 213.92. It's trading 215.92 right now. The high was 217.22. So they had a decent amount of range, about 3.25 points today. So they're coming for the fruit company. It's a weird day, listeners, when the fruit company can be off nearly $7 and some other markets can still be green. It used to be fruit company was the bellwether. Where they went, the rest of the market followed. Not so much the case these days. Fruit company, number 2, 851. That leaves the big dog, NVIDIA, still not looking as explosive as we've seen it, obviously, in the past. 1.9 million contracts. NVIDIA, 116 and about a half, off about 2 2/3, or about 2.2% today. Their low was 114 and a third. Their high was 118.18. So they're hanging out kind of in the middle of that range right now. Good for number 1, 1.9 million. Again, they've done nearly 11 million contracts in the past. So nearly 2 million is kind of a bit of a rounding error out there for the folks at NVIDIA. Let's see what else we have on the docket out there for us today, listeners. Earnings season pretty much winding down. Last week was kind of the big banger final big week. I mean, unless you're really excited about some Darden restaurants on Thursday, in which case, hey, we don't judge. Oh, Cracker Barrel also on Thursday. There you go. 2 bangers, and then FedEx after the bell on Thursday, and Leonard. So, I mean, you got some names popping off there. Who doesn't get excited about a doubleheader of Darden restaurants and Cracker Barrel before the bell? If you don't get excited about that, then what's the point of living, I ask you out there, listeners? So still some names popping off. And luckily for you, we're still crunching the data for you because we like you folks out there. TheOptionsInsider.com is the place to go. Click on the options, news, and articles tab to begin your journey to the dark side, listeners. And you know what? Because we like you, let's do a little hit on Darden restaurants. They are the 19th before the bell. They were trading 160 and a quarter when we ran this report this morning. They're pricing in nearly $7, $6.90. In the past, they moved 4 and a quarter. So clearly there's some juice to be had in Darden restaurants out there right now. Wow. Interesting. Let's go out to FedEx as well. 19th after the bell. 286 and about a third is where they were trading. They're pricing in 19 and 3/4. In the past, they've moved 19.36. So not a heck of a lot of difference out there one way or the other. Not exactly pricing in a banger out there, listeners. Let's look really quickly at some other hot ones. Are you a big General Mills head? 75.20 is where it's trading right now. Ticker symbol GIS, listeners. They are 18th before the bell. 73 and 3/4 is where they were trading when we ran this report. And they're pricing in about 270. In the past, they've moved about 270. So almost exactly in line with their previous actions, which is kind of interesting. I guess they didn't get the memo that this season it's all about buying the juice. Listener, speaking of this season, is it still hanging out as a banger? I think the technical term is yes, 125. That's pretty much, it seems like where we're going to settle out for this cycle. This is 125%. Want a quick rundown? Week 1, 117%. Week 2, 149%. Week 3, 137%. Week 4, 107%. Week 5, the lone dark spot on the season, 97%. Even that was pretty good. If you go back to some of the late pandemic or even into 2021, 2022 kind of time frame, 97% would have been a pretty explosive cycle. So 97% being our weakest kind of shows you where we are right now. And then week 6, 138%. All that averages together to 125%, which is 12% above our 113% long-term moving average. So all of you who picked in our poll a few months ago, are we going to beat it this cycle? The answer has been a resounding yes. As we keep on rolling, listeners, it's time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird. Time to get wild. Time to leave some wreckage in our wake. It is time for the odd block. Well, let's kick things off. Let's go out to residential realty, shall we, listeners? To Compass Inc. Ticker symbol COMP, COMP. They have approximately 29,000 agents throughout the country, listeners. So there you go, listeners. Compass trading 642 right now, up about a nickel today. So not exactly a banger day for them, even though they had nearly a 40-cent range on the day. So intraday, they've done a little bit more living. Also a pretty decent year. Who needs AI when you're about Compass, listeners? They're up 317 or nearly 100% on the year, about 98%. They were trading about 3.25 a year ago. It was like they took them down right around Halloween to about $1.82. That was their nadir for the year. And ever since then, it's kind of been off to the races. So if you go from $1.82 to now, they're up substantially more. So it's been a good run here for residential realty, which is kind of interesting. Rates high. Everyone's complaining about, the housing market. Not a lot of houses moving. But apparently that has not weighed upon Compass Inc. listeners. Let's see. What did our Eye of Sauron find? Well, you know what? Maybe somebody thinks the partay is coming to an end, listeners, because we got some size put paper to kick things off here in Compass today. And you know what? They're not messing around. They're not going out very long at all. They're buying SEP 6 puts. So the stock 642 right now. They're buying effectively weekly puts. Listen, these are going out this week. They paid 22 cents, 5,567 times. And pretty much through the offer, they were offered at 20 cents at the time. They really had to have them. Total of 5,567. Then they came back and said, you know what? We'll get some more. I think this might have been earlier. Yeah, these were about 2 minutes earlier. They bought 2,489 for about 19 cents. So obviously they kept coming back and just lifting offers till they had to go through the offer. They did a total of 16,000 on the day, listeners. So this one's an interesting one and a bit of a head scratcher for a number of reasons. First off, just the absurdly aggressive nature, especially of that last 5,500. They really had to have those paying through the offer. B, they're hedging, but they're not hedging anything in the immediate offing. Obviously, we have the earnings coming up on the 6th. So this is usually the kind of paper you would see around earnings. Now, obviously, we have the Fed this week, and that's going to play into the housing market. So you'd have to assume this is a Fed play. But still, it's not an inexpensive Fed play. 22 cents. These are 42-cent out of the money puts. So you need to have the stock move roughly 10% over the course of this week. That's a 142 vol they are buying, listeners, in order for these puts to be even remotely relevant. So they are pricing in a banger Fed day to the downside, Mr. Rock Lobster, and they're willing to pay up to do it, and they're not giving themselves a heck of a lot of time at all. So, wow. Somebody's expecting the bottom to fall out of Compass Inc. Mr. Rock Lobster, what say you, sir? You like these?
You mean just straight up buying those puts? Well,
buying them
day
all,
one, they're right.
Give me all the puts.
Yeah, I mean, day one, they're right. It doesn't appear like, you know what? There's even a Compass real estate agent in downtown Bath, I think.
No way. They exist that far out in the sticks? And
I think they got taken over by Vitalis or something. I'm not quite sure what the deal is. But I do recall a Compass, and yes, of all places, kind of weird. Like, not quite sure what the deal is. Like they have this high market cap, but they never make money. So I'm not quite sure what the deal is with it. But anyway, somebody is betting. I don't see any stock with these. Let me see here. I haven't had time to look for time and sales for EquiStock, but it's just a whole lot of put buying. I mean, what else can you say? And so far they're right.
So far they are right. Will they be right throughout this week? Do you like this? Listen, do you like backing up the truck on weekly puts in a domestic realtor during Fed week? Is Fed going to hit them that hard? Maybe. I suppose it's possible, but I mean, my goodness, that's they're really betting for this thing to fall out of bed. And you're right. There could have been stock components to it. They didn't go up tied, with this kind of size, it's probably a safe assumption. In which case, then you're obviously going for a bit of a more of a vol play out there. But 141 vol, you're not. You're buying a lot of vol. It's hard to make money. But yeah, this one's a bit of a banger. Tell you what, listeners, let's come back on Thursday and see how this fellow or lady is trading out there and faring. I have a feeling they're going to be unhappy campers, but you never know out there. How much stock could they have bought again? I mean, I don't know. Just seems crazy to me on this one, on all sorts of fronts. If you're going to do this, it usually makes sense a little bit longer term, not a week. Usually makes sense to do it around an earnings event. They're clearly expecting Powell and company to just take the legs out from this name, which is fascinating in and of itself. Also, the aggressive nature of it, lifting through the offer to get the last chunk. Just wow. Well, if you like pricey puts, listeners, we got a good one for you next. It's a put palooza today out there. Interesting day. Interesting how the paper shapes up on these weird kind of days. Let's go out to, I do believe this is a newcomer. This is Galectin Therapeutics Inc. Ticker symbol GALT, G-A-L-T. So not the GALT baby, but Galectin Therapeutics instead. They are obviously a biotech. Of what type, I do not know. They don't really have much of a description of them here at all. And I click through to the website, it's just going to bring the whole Southern studio to a crashing halt. So let's hold off on that list. Instead, 283 right now is where the stock's trading, off a whopping 4 cents. So this is one of our pricier names, sub $3. A year ago, it was trading $1.97, so they're up about 86 cents. So they've had a good run, 43%. They actually got higher. They got up to 4.25 back in April. And then since then, so it's kind of been like a tale of 2 years for them. The first half of the year, all the way through April, was a banger. It got up to about 4.25, and then they pretty much shed all that over the last 6 months, which is kind of interesting. So 4.25, and then from there right down, they took them all the way back down to about $2 even, just about a month ago in the first week of August, and then since then they've been rallying again up to about 283. So yeah, a lot of living, as you would expect in all of these kind of cheapy biotechs, and now I am intrigued. They make a treatment for non-alcoholic hepatitis and cirrhosis of the liver. Okay, all right. So they're looking to help people with non-alcoholic cirrhosis. So you're not an alcoholic, but still you have liver problems. They're hoping to help you. So hopefully their stuff works. But looks like Mr. Rock Lobster, somebody is betting that Galectin Therapeutics Inc. is going the way of the dodo pretty damn quick, because they came in. The stock is $2.83. Remember that list. The stock is $2.83. They came in this morning. They said, Jan, 2.5 puts. How are they? They got a market of $1.35 at $1.60. They said, we'll pay $1.50 3,300 times. So first off, that market, $1.35 bid for the 2.5 puts in January. So the market right off the bat presupposes that this company is going the way of the dodo. The $1.35 bid out of the gate, and they paid $1.50 for these puts. So they paid over 50% of the value of the stock for a put that goes through January. There are earnings coming up. Why they had to do this now, I don't know. Obviously, they're just probably scared out of their minds, I suppose. Their earnings are not till November 11th, so you would think they would have some time, roughly 2 months. But no, they needed to have these puts now. So I wish, this is one of the times when I kind of wish the Viceroy was here, so I could just hear I could hear wherever he is, I could hear him just frowning at this one. Mr. Rock Lobster. Over 50% of the value of the stock for a put that expires in January, sir. What say you?
You could hear the Viceroy guffaws.
Yeah, I can just hear like the exasperated sigh coming through the airwaves right now.
Yeah, he would not be a happy Viceroy on this one. Oh my word. You know, we have seen these puts trade, not in GALT, of course, but in other stocks. And they've paid, except I don't remember them paying as much as a percentage of the underlying price. But
puts were $1.35 bid out the gate when they got the market.
yeah,
They're pricing this thing going to zero.
yeah. So it's apparently the non-cirrhosis of non-alcoholic cirrhosis. I didn't even know that was a thing. Maybe that's part of the problem. Nobody knows it's a thing either. But anyway, clearly somebody thinks it's a thing. So I would say on this score, what do we got? Maybe they'll pay. I guess it's possible for them to make some money, but it's going to take a long time for them to make any money at all. And they just paid one. Yeah, they're 45.50. They could make some money. Maybe somebody's buying them with stock. I don't know why you would. Again, all
makes it even better if you bought stock.
The cleverness of this one just escapes me. Sometimes we call it the op block for a reason because we can't figure some things out. And I
hope someone bought these.
Maybe they get a 20-25% return. I don't even know how they get 50 cents out of them. I guess the stock would have to go to 50 cents and kind of just be a zombie. So it's possible.
If you bought these with stock, I want to hear from you. You're like, I wanted to buy the nearly $3 stock, but I wasn't comfortable. So I had to pay like 60% of the value of the stock for. I love everything about that. I hope that's the case.
Sometimes I ask what people think of when they trade these options.
I don't think they got past page 1 of Natenberg and they just decided to. So if you're feeling daring,
I guess that's why option education has a future, because you can have all the AI in the world, but eventually, you got to learn the hard way. So,
listeners, if you're feeling daring, you want to sell a put for roughly 60% of the value of the stock. That looks like, by all indications, is going to go the way of the dodo between now and January. But you want to dive into that fire. You like your put sales a little bit dicey, then by all means, that there were $1.40, 35 bid at the time. They're probably bid higher now for these puts. So you could go sell these puts for close to $1.50 and let the dice fly, listeners. GALT, Jan 2.5 puts. Have at it. Oh, wow. Just crazy stuff. After that, listeners, we need a little bit of a palate cleanser. Let's dial it back a little bit from the edge of crazy. Sometimes, it can't all be bangers. Sometimes it has to be just like meat and potatoes. People are out there. They're out there doing what you do. They want to get some income in their lives as well. So got to have some of those in there as well. Today, we'll finish it up with KKR. I haven't talked about them in a while. Big dogs of the 80s. These days, they've kind of gone through multiple iterations since then, since the old Barbarians at the Gates days. 126 and a third, up $3.50, or nearly 3% today. So they're popping hard today. On the year, let's see, a year ago was $64. So they pretty much doubled, about 96%. That's a nice little run for KKR. So they've been on the rampage as well. And let's see, looks like somebody's deciding, you know what? I'm liking my little run I've had in KKR. I'm going to take some income off the table because they came in and sold 7,894 of these SEP 134s expiring on the 27th. So in the weeklies, a couple of weeks out. They got 35 cents for them. Again, not explosive, but not terrible either. And then they came back, liked it so much, they did it again, the exact same size, the exact same price, 7,894 times, 35 cents on the docket. So clearly somebody looking for a little bit of income, a little bit of yield. Can't fault them. Put a little money in the bank for a rainy day. You know what? If the stock hits 134 over the next couple of weeks, I'm sure they'll be very happy letting some go. Mr. Rock Lobster, a little bit of meat and potatoes, a little bit of income to top off our insane 60% puts we were just talking about. I'm still laughing about those.
And what's funny, like from the bottom, like say the COVID bottom, this is up like 9x from there. It was like a $15 stock. Of course, everybody's like private equity, that's all going to be dead, right? And then, but KKR, like it has produced some returns, private equity. So some shareholders have made some money. But you look at this and you're like, oh, I guess the only thing is somebody just wants some short-term calls and they'll take the 135 and be happy. So Not much past that. You'll take the 10 extra bucks, but that would be a multi-year high, I think, to get there. So it's, it could be, maybe it's free money. Maybe Henry Kravis needs, he needs to write some calls. He needs to make a couple bucks.
Is he still part of this? There's been so many iterations since those days. I don't know, but whenever I see this name,
I think Roberts. I think Kohlberg is the one that retired. I don't know if they're still alive. I mean, it's years later, obviously.
Yeah,
but those guys have made some money over the years.
Whenever I think of this name, I just think of Jonathan Pryce playing them in the Barbarians at the Gates, which you've never seen it, listeners. The Battle for Nabisco. Great movie out. They don't make good finance movies like that anymore, but that was a good one. And speaking of good ones, let's see if Uncle Mike's got one in store for us. A little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
Producer, hot on the button, just crushing it there in the Chi-Town studio. Yes, listeners, it is not Thursday. It is Monday. I am not crushing it. It is Monday here on the old option block. Time to unleash Uncle Mike. Mr. Uncle Mike, first off, inquiring minds want to know, what would it take for you to buy $1.50 puts in a $2.88 name? I just need to hear what it would take for you. And then B, what else you got for us on the strategy block this week?
I guess I would say a really, really good price. So
is $1.50? That's not a good price.
Yeah, no. So no, I don't think I would do that. So I don't even like messing with stocks below $30 and $40 a share. So I don't think that I'm the one to even get into the debate about options on stocks below $5. So that's kind of where I'm at with that. But what I would like to talk about today is using the VIX to hedge your S&P stock positions and why I don't do it. Now, first off, I want to clarify something. I'm not talking about a trading strategy to where you're doing similar stuff to like what the Rock Lobster and the Greasy Meatball talk about in terms of buying calls on the VIX and puts on SPY and things like that. I'm not talking about stuff like that at all. I'm talking about with your nest egg, your real money, your money that you're going to be using to retire in 10, 15, 20 years, whatever the case may be. And there's times to where I've seen people use VIX, or not times, it's actually very popular that people will use calls on the VIX to hedge their stock holdings. Now, I don't feel that's a good idea. And the reason is that, well, first off, the concept as to why someone would do that in the first place would be that the cost of calls on the VIX would typically be less than the cost of puts on the S&P. Now, I'm not talking contract for contract or anything like that, but if you look through certain back tests and the moves you get on the VIX, people say, oh, you can get just that same amount of movement for a lot less cost in the VIX. Why not just do that? And that's kind of the motivation for wanting to do that. The theory is that the VIX and the S&P 500 have an inverse relationship, and oftentimes they do. But the problem with doing that is, there's a couple problems with it. First off, number one, if you are looking to take your profits on the VIX, you better do it quick, because there's often times to where when we have a down move in the S&P, the VIX will spike, but it doesn't necessarily stay there for very long. So you better be able to take your profits and know when you want to take your profits and why you're taking your profits, because sometimes the VIX will spike and then maybe the market will go down further and then maybe the VIX won't spike, or whatever the case may be. You better be ready to act very quickly and have a plan of having your limit order in if you can't be by your computer. Now, the second reason with which it concerns me is that when I talk about how the VIX and the S&P oftentimes have an inverse correlation, they don't always have an inverse correlation. I am literally looking at my screen right now. S&P is positive on the day, VIX is positive on the day. Now, I know that S&P is barely positive on the day, but my point is that there's no guarantee that you're going to get that inverse correlation. And so I've often used the statement using the VIX, buying calls on the VIX to hedge your stock portfolio is a lot like buying car insurance to protect your home. And you could argue that theoretically, if your car crashed into your house, your car insurance would do the job just fine, depending on how the underwriters view your car insurance policy. But in reality, you're not really insuring the right thing. So, what I'd like to just recommend to people is that if you want to do various pairing strategies and things like that, like what the rock lobster and the greasy meatball talk about, have at it. That's totally fine. It's not what I'm talking about at all. But for your larger money, if you're concerned and you want to buy puts to protect it and you want to have hedged equity as an asset class, I think you're better off using the S&P or perhaps the NASDAQ, depending on, or the Dow, depending on what type of stock holdings that you have for your portfolio protection. I'll be doing a webinar on this Thursday, right after the show, actually, now that I'm looking at my schedule. So for more information on this, tune in Thursday after the show. And that is my strategy block for today.
I think you've been listening to us on Volviews lately, sir, talking about how difficult it is to monetize those VIX calls. Check them out on the webinar, listeners, as you check us out as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're keeping an eye on until our next show. I think everyone can guess what the entire market is focused on between now and Thursday. Of course, it is the Fed. So we also put out a fun question of the week. We already asked you about our Fed rate cut question last week. This one kind of inspired by what we'll be talking about a little bit later on the Crypto Rundown. Check it out. Again, if you're listening to the full network, another reason why you should be subscribed to the full network. By the way, I'd love to see so many people excited about the new Future show. Glad to see you're all having a good time. Another reason, yet another reason to listen to the full network if you're just listening to the option block. We like you, but what are you doing? You're missing out on so much other good stuff. We asked you this morning, in the spirit of the Crypto Rundown, this has been a oddly contentious issue yet again. It seemed like maybe we had settled this, but apparently not. Because, Bitcoin, the big dog out there in the crypto space, has lived many lives over the past decade. People have described it as many different things. They've talked about it in many different terms. We now have quite a bit of data under our belts, but the debate still rages. What role does Bitcoin really play in a portfolio? We gave you three choices and the infamous other. We gave you it's digital gold, it's an uncorrelated asset class, it's just another tech allocation, which was a popular one for a while there on the Crypto Rundown, or other. You're left to chime in with your others. We've got Vernon Griffin chiming in. He sounds like Uncle Mike. He says it's just a lottery ticket, a bad retirement plan lottery ticket. So there you go. He represents the Uncle Mike contingent out there. Mr. Rock Lobster, if you have a vote, what role do you think Bitcoin, what do you think Bitcoin really is these days? Is it digital gold? Is it just an uncorrelated thing? Is it another high-tech allocation? Is it something else entirely? How do you view it? And then B, what are you keeping an eye on for the rest of the week in addition to the Fed?
I don't know. What does Uncle Mike call it?
He says Bitcoin is awesome and he can't stop buying it. That's what he says.
Yeah, it's a curiosity. It's like, I don't know, it's like baseball cards. They just there aren't a lot of Lou Gehrig baseball cards, so the value keeps going up. There's a finite amount of Bitcoin, but the value keeps going up. Where it stops, I don't know. I think, and that's kind of where I am on that one. So whatever the closest category is, that's where I am. It's a technology curiosity.
I guess you'd say it's just another tech stock.
You could think about it, but that will never make any money.
It has no income, but it's correlated.
That has zero earnings. Yes.
Okay, and what else are you keeping an eye on, sir?
We could just say Fed all over again, but it's how do you ask yourself if the government is too involved in markets when the whole market is waiting for a week or 2 weeks or a month for the Fed to say something? That's how you know, and that's where we are. So as soon as we can go back to the government doing less, as much as everybody say, oh, the government saved this, whatever. I think if they were out of the markets, it would be better for everybody. But that's what we're waiting on. And this Apple thing I find a little curious. We'll see if it has any legs, because everybody's worried about nobody's buying a new iPhone 16. And I'm sure I will not buy a new iPhone 16 until 2029. So there you go. That is the Lobster indicator on that.
That sell-off, you're right, could be driven by that new iPhone's landing with a resounding thud out there. Not a lot of people. A camera button didn't seem to excite a lot of people out there. Mr. Uncle Mike, same question for you. As the proud owner of Bitcoin is really awesome and I can't stop buying it.com. Where do you think, what role does Bitcoin really play in a portfolio? Is it digital gold? Is it an uncorrelated asset class? Is it just another tech allocation at the end of the day, or other? And feel free to have an other if you like. And then B, what else keeping an eye on this week?
I think I've mentioned my other on Bitcoin enough on this show through the years. So I'll go with the other camp with where I'm at with it. And I think just with what we're watching, it's Fed, and more Fed. That's what it's going to be. What I'm also watching is seeing how the precious metals react to this, because we've been rallying in silver recently. And so wanting to see if silver can make some new all-time highs after the Fed announcement, depending on where it goes and what happens to it. So that's what I'm watching.
Right now in the early offing, listeners, uncorrelated asset class is taking it with 42.9%. 28.6% still holding on to the digital gold thing. Then we have a tie for third, 14.3%, with it's just another tech stock and other. And we've already read some of your others. Get your votes in, add options. That is our question of the week right now, listeners. All right, that is going to do it for us on the option block this week. But before we go, let's go around the horn. By the way, check out our friends over there at Public, a great way to support the show. They have a great URL for you to do just that, public.com/option block. Easy to do. Just go there. That's all you got to do, really. Just go to that URL. And that lets them know, hey, you're coming to them from our show. They're already loving the feedback they're getting from you folks. They've already asked to keep hanging out on the show. So they're liking what they're hearing from you folks. Keep it up. It's a virtuous circle. You like having the show coming at you a couple of times a week. That's how you do it. Public.com/option block, the place to go to kick the tires and light the fires. Try out the rebate. Maybe you like it. Maybe you got some good feedback for them on what they could add or tweak to their existing platform. They want to hear it. Public.com/option block. And Mr. Uncle Mike, if folks want to hear from you, or I should say hear more from you, well, where should they go? What should they do?
Follow me on Twitter at Mike Tosaw, Tosaw. And if you're looking for a financial advisor who is not afraid to have a debate about VIX options versus S&P options, feel free to go to my website, stcharleswealth.com, book an appointment with me. Would love to have that conversation.
Not afraid to wear a shirt emblazoned with his URL, proudly, bitcoinisreallyawesome.com. Uncle Mike's favorite other holding outside of his stcharleswealth.com. His favorite URL to date. And Mr. Rock Lobster, same question for you, sir. Where should folks go if they want more Rock Lobster goodness in their lives?
Yes, go to optionpit.com, 10% off everything we have there. And if you want to learn how to trade that VIX stuff, and I agree with Mike on that, you got to kind of match how you trade the VIX. But yeah, go to optionpit.com and you can learn how to do all that. Yes, you can. Optionpit.com.
Learn how to earn. Optionpit.com. That's going to do it for us on the old OB today. I'll be back from the Southern studio in a little bit to talk all the madness of crypto. What's going on out there? What does Fed Week have in store for us on the crypto front? Let's find out, listeners. It's the Crypto Rundown coming at you a little bit after this show. I'll be beaming in throughout the week from the old STA conference as well. I'll be sitting down with a bunch of people, as I am wont to do at all these events. So look for those. They'll probably be hitting the pro side first and then the rest of the network later on. So if you want to get access to those, theoptionsinsider.com/pro, as well as, of course, you folks already got access to episodes 3 of the Futures Rundown and episode, 306 of Options Bootcamp. Those are already available for you on the pro feed. They'll be hitting the main network feed this week as well. And I'll be coming at you again for episode 2 of the Option Block from the Southern studio on Thursday. See you then, listeners, and stay safe out there.
If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch. The only options trading platform where you can earn rebates on every single contract traded. To learn more, please visit public.com/optionblock. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.